Welcome to Behind the Ticker, the podcast where we go beyond the symbol and into the strategy. I'm Brad Roth, founder and chief investment officer at Thor Funds, and in each episode, I sit down with ETF managers, CIOs, and industry leaders to break down how these funds are actually built, how they behave in real markets, and how advisors use them in real portfolios. Most people just see a ticker symbol, but we know much more goes on behind the ticker. Hey, Yuri, welcome to the show.
Hi, Brad. How are you?
Good. So why don't you take a little bit of time, give everybody a bit about your background. You spent about a decade at Majetti Asset Management in London. You guys were managing UK and global equity portfolios. The income fund went from about 300 million to $1.5 billion. And then you went back to Cambridge, if I read your bio correctly, for a master's in bioscience. That's a pretty unusual career path or career pivot, I should say. Can you walk us through how it all folded? And now, you're sitting over here at Tema ETFs.
Yeah, absolutely. Look, I'll give you the quick kind of tour of my career, my life so far. Look, I started working in fund management. It was a passion of mine in university. Always loved investing, always loved understanding the markets and just kind of the multifaceted way things move and are related to each other. It's probably the intellectual challenge for really bar none, especially how it links kind of actual events to psychology, which I really like. So I started in the financial crisis 2009 as an analyst on a long short hedge fund under the Majetti as a company. Spent a decade there. Eventually, after being an analyst for a while, got promoted to run the UK Income Fund, which was a fund investing in UK but also global stocks with an income mandate, but really looking for interesting, high quality businesses that were maybe had a problem going on or some sort of undervaluation. It was a great learning ground. There was lots of crises, lots of things happening, lots of different companies in the UK and globally as well. So I spent, that period of time. And as you say, our fund grew. I think at its peak was about $2 billion actually we managed, including segregated accounts as well. And then, I think there's lots of reasons why I left and one leaves the company. I think I was looking to recreate what Majetti was like in the early days. Really an investment-driven organization, but very entrepreneurial. And my kind of path to do that was to exit from the industry for a little bit and do a mid-career master's. So whereas a lot of people do maybe a late MBA, I decided I'm going to go learn about a sector that I really enjoy. And it fits quite well with what we do at Tema because we run a couple of biotech funds here as well. I just wanted to learn about biosciences. I think it's super interesting from a business perspective, and it's a sector that we've invested in and continue to invest in today. After that period, I went on what I call my entrepreneurial journey. And as many people out there have tried entrepreneurial things, you try a few things, they didn't work out, some things work. And I landed essentially at Tema, basically after sort of meeting our founder, Moritz Pott, and getting inspired by what he saw out there in the world, which is the rise of ETFs, but really actively managed ETFs, and this mission of building kind of an institutional grade asset manager that is ETFs first. And so we set out on this mission 3 years ago, and we're very lucky to just cross $2 billion in AUM, and we're on our way, hopefully, to building products that people want. We have 10 ETFs in the marketplace, and that's kind of my background and career journey today.
Yeah, it's very interesting. And before we get into Tema, I always ask every guest, when you're not behind the desk, and I know, the entrepreneurship life can be quite hectic. Any hobbies? What do you like to do when you're not working?
So I've got a little son. He's 2.5 years old, so that he keeps me very, very busy. I like to exercise. We used to do CrossFit before, and now do a couple of other different types of exercise. Just try to stay healthy. And I love reading about finance. I know it sounds a bit cliche, but when you become obsessed, some people read about football. I read about financial markets. I write about financial markets. So that's my sort of hobby, if you will. So whenever I'm not doing work, I'm kind of reading about it, if that makes sense.
Let's talk about Tema. As you said, you and your partner started the firm, I think, around 2022. Can you give us a high level? What is Tema ETFs, and really what's the firm's, investments philosophy? Just get products out there that you think people are going to want, or is there something more core behind it?
So I should say I didn't found Tema. I was one of the first few employees. Moritz Pott, our founder, really had the vision, which was there was kind of a gap he felt in the ETF market, especially as actively managed ETFs were opening up. And that gap was to build an independent institutional grade manager. So bring investment talent from the hedge fund world, from long onlys, people who have been doing this for decades, like myself and our investment team, I think, has a collective 100 plus, maybe 120 years of experience. And this was the thesis. Bring that to areas of the market and asset classes where we felt we could add value. And the three kind of key values, I think, for us are purity. So, we want to build good products that are purely exposed to that particular theme or area. The second is looking for good quality businesses over the long run. So we're not trying to jump on the latest marketing trend or the latest, pump in the market, if you will. We're trying to build long-term structural thematics, and we're trying to buy companies that are the best exposed to that over the long run. And the third thing is really to just kind of provide products that advisors and clients want and need in their portfolios that add something different to what they already have. As you know, Brad, there are 5,000 ETFs out there right now, and it's important that that you build products that actually solve a problem for clients.
So you guys have built, a pretty broad suite at this point. You've got ETFs in reshoring, you've got one in heart health, you've got one in, oncology, we've got international, and now we're going to talk today about the NASA ETF. Just, when you guys are sitting around talking about this, how do you decide which themes are kind of worthy of a dedicated fund versus just a trend that's going to fade in a year or two?
It's a great question, and unfortunately, the sort of thematic part of our suite and the equity market, it's got a bad kind of history, right? Often products people jump on marketing trends. They call their ETFs like millennial or metaverse or meme stocks, whatever it is. We're really trying to be completely different to that, and it all starts with the investment core. Is there kind of a long-term structural theme and growth kind of trajectory of this particular area of the market? Or is there a really compelling reason why people want to hold this over the long run? If you start with that, you kind of weed away all of the speculative froth and all of the marketing kind of positioning people do, and you try to build products that are going to offer something. And then it's incumbent on us to decide, can active management add value? Can we add value to these types of products? Can we build a good product around this particular theme? So, remarkably, if you think about the long term, you often get really good products. And when we're talking long term here, we're talking about, decades often. So take an example of reshoring or space. These are fantastic growth themes that have already taken root and are likely to continue for a long run. I mean, space particularly is pretty much an open-ended growth story in the market right now.
So let's get into, the NASA ETF, the Tema Space Innovators ETF, ticker NASA, great ticker, by the way. You guys launched this in March. It's actively managed 75 basis points at a high level. What is this fund and what is the problem that it's solving for?
Look, we launched it in March. You're absolutely right. And we set out to build essentially around kind of the core values of what Tema tries to provide. So first of all, this is an ETF that offers access to interesting parts of the market. And in this case, it means actually access to SpaceX within the ETF. So uniquely, we've put a private company into an ETF, and I'm sure we'll get to discussing that. But the ETF gives you that access point. The second point, which is what I talked about, is purity of exposure. And we want every holding to be tied to the space economy within this ETF. And we've spent a long time trying to find interesting companies that are maybe under the radar that are exposed to this theme. But purity is really important because space often gets muddied with defense, aerospace, all kinds of technology. Sometimes you see companies like John Deere in there. That isn't what we're trying to do. We're trying to give pure exposure to investors. The other point is trying to find these under the radar companies. So it's what we do. We are institutional investors. So we have pretty much left no stone unturned and found some really interesting suppliers into the space economy that are just not existent in competing ETFs. And finally, the core premise is this is a rapidly evolving space. So you need to be very forward looking if you're going to run a successful ETF in this part of the market. And you need to provide differentiated research. And that's really what Tema is about, right? Institutional investors. So myself and my colleague Hong Chen, we manage this ETF and we spent a lot of time looking at different parts of the market, and we're doing differentiated research focused on the future for this fund.
So you're right. I do want to talk about the SpaceX exposure because it's extremely unique. So when I looked at this, you've got roughly 10 to 15% of the fund allocated to SpaceX through an SPV provided by Forge, which is a Charles Schwab subsidiary. You've said space ETF without SpaceX is like a semiconductor ETF without Nvidia. So can you walk us through mechanically, actually, how this structure works and what an investor needs to understand about owning a private company exposure inside of a liquid ETF wrap?
Absolutely. So look, I think at the outset, when we set out to build this ETF, we were so focused on the purity of exposure and getting good quality businesses in it. It felt wrong not to at least explore what it was like to put SpaceX. And people will very soon, when the S1 becomes public and it becomes the IPO, will start to realize how fundamental this company has been to the space economy and its dominant position. As a vertically integrated player, it is responsible to more than 50% of launches last year. This is the premier business in space economy. It also dwarfs the rest of the businesses in terms of size. So very similar to the point you said about Nvidia, it just felt wrong not to have it. And so when we started to explore the mechanics of can it be done, we found that actually, within an ETF, you can have up to 15% prior or illiquid holdings. Sourcing these shares, the company has stayed private so long, it's become so large that there is a very healthy secondary market, and we transact on several different platforms actually to acquire these stakes. It's close to the IPO, and so we felt actually it's worth going through the effort of putting it into the ETF ahead of the IPO. And so for investors, I think those that are seeking out SpaceX themselves, this is a much better vehicle to gain that exposure. Because if you go on the secondary market yourself and try to transact, there are complicated legal terms. You get into the SPV dynamics. With NASA, you get SpaceX exposure in a transparent, SEC registered, very clear vehicle. And that's something that we think is going to be attractive to investors.
So, if I also read this correctly, it appears that you guys are absorbing kind of all the transaction costs, fees, commissions on that SpaceX SPV inside of that 75 basis point management fee. So, no hidden costs. I mean, that's a pretty aggressive stance. You don't need to get into all the, the economics, but it's a very unique structure. And I was curious, was it difficult getting the regulatory go ahead for a product like this or for a fee structure like this?
Fee waivers are actually quite a normal part of the ETF business. A lot of people will have, gross fees and then they waive certain types of fees. At the beginning, when we launched the ETF, and I should say that this is up to a certain point, right? Like we have a cap on these fees, but effectively what we're doing is at the initial kind of investor, we felt that there was a point where some of the fees associated with buying private stakes can be complicated. And those fees can sometimes sting investors. And there's a couple of examples of that out there. And so we felt that it was prudent to kind of create this transparency by saying, look, we'll cover all of the fees. Now, those fees are kind of management performance fees, and admin fees related to purchasing the SPV stake for the fund. Very recently, we actually, but when we went out to the market, we said we'll cover those fees, but there's a cap as to which level we cover those. The fund has been much more successful than we expected. And so we're very close or about to hit that cap. So after that point, some of those fees will be passed on to investors, but that's simply because of the success of the ETF.
Interesting. So why don't we talk about the rest of the portfolio beyond just SpaceX? You guys hold, 20 to 40 names. Can you kind of walk us through the full stack of what the space economy looks like in your eyes and how you're trying to build a portfolio around it?
Yeah, absolutely. Look, so you've got SpaceX, which is a vertically integrated business and is an important part of this portfolio. Then you have the kind of concept of launch and propulsion. So these are companies that are providing launch services. So they'll take whatever payload you want and they put it up into low Earth orbit or space. Often that payload is satellites. And so we also own companies that manufacture the satellites. And sometimes there's a full integration. If you take SpaceX, they own Starlink, which is a satellite constellation. They make the satellites for Starlink and they put them up into space in their own rockets. Then you have connectivity, because the kind of first era of space is to use those satellites to improve access. Starlink really improves broadband access for those that don't have access to it. But you're also talking about intelligence and imaging. So using those satellites for images. So there's a couple of companies that operate in that space. And finally, and what I think is kind of the secret sauce of this fund is the supply chain. And this is where we differentiate ourselves versus competing ETFs. What we wanted to do was find those really interesting businesses that are often high quality that supply into SpaceX and others in the space economy. And we think those are a really important part of the fund. So together, that forms the overall kind of space economy universe, if you will. And what kind of interesting for investors is there's a lot of opportunities in these businesses to deliver services on Earth and to build orbital infrastructure to create more and more things there. And it's not really about space travel, if you will. That is probably the next frontier, maybe second or third. And so it's less risky and more focused on services we have on Earth.
That makes sense to me. And kind of looking at portfolio construction, top 10 holdings are about 60% of the fund. That's a pretty concentrated portfolio in a niche theme. How do you think about position sizing and kind of managing concentration risk? Or is it based, or do you have some sort of kind of metrics around how you're weighting these companies? Like, is it market cap weighted or is it purely an active decision?
So the weighting methodology is really around kind of conviction. That's how we sort of size the positions, right? So we're looking for companies where two things sort of happen. There's a conviction on the valuation of the company and there's conviction on the quality of business. And that's how the sizing happens in the portfolio. We try to create kind of buckets of size, if you will. So we're trying to take away some of the unnecessary discretion that exists within active management. The kind of pure focus of the ETF is to is kind of what I would say is the selection of the stocks, right? Finding those under the radar supply chain businesses rather than necessarily the size. Often what I see with active funds is sizing is where alpha is lost or performance is lost. And so what we wanted to do is create some sets of rules around that. And that's what you see in the construction ETF. And conviction we found is the best way to navigate between the different position sizes. So the other thing we're trying to do is make sure that we're exposed to kind of the future of space. And with sort of backward looking and often passive indices have this problem. It's about finding, okay, where are the most interesting areas and pockets of space? For us, it's what SpaceX has done to the space economy, which has created essentially a commercial organization around it, commercial production of satellites, commercial business of internet from space. And this is a transformation that has happened thanks to SpaceX, and we're looking for those types of businesses. The other bit is the international piece. So what we're seeing more and more is there's a geopolitical split in space, and it used to be a much more collaborative endeavor, but actually now it's less so. And so countries like Japan, countries like Germany, Italy are all investing and trying to bring out their own space champions. And part of the fund is that. So the thematic piece can also make kind of a play as how you see the shape of the portfolio, the sub-thematic.
Makes sense. And so let's talk about just real briefly kind of the space economy as a whole. It's projected to nearly triple from about 630 billion in 2023 to almost 2 trillion by 2035. That's a 9% annual growth rate. What are the two or three biggest drivers you think that market is like maybe still underpricing, and where are we going to see a lot of that?
Yeah, it's a great point. And obviously people listening to this will say, okay, well, 9%, that doesn't seem like a super exciting number. But I think what it belies is kind of the transition that's going on within the space economy, which I touched on earlier. We're moving from a world where space was dominated by kind of the defense primes and governments. Space was a highly expensive and risky endeavor. So, satellites cost $600 million. They were highly engineered products. They would go into geostationary orbit. And space was really this kind of bespoke cost plus type business, which meant that it was slower moving and not as exciting. What SpaceX did, and really it's that company that has transformed it, it's changed space into a kind of a manufacturing business, like a much higher volume, try and fail. And thanks to them, launch costs have come down 90%. And this mentality has now started to permeate not just other commercial space launch companies and commercial satellite manufacturers, but governments as well. Increasingly, they're seeing the success that SpaceX has had and are pushing companies and are essentially giving contracts to companies that are embracing that kind of mentality. So under the surface, you have the legacy part of space actually grow kind of flat. And then you have much faster parts of the market. So if you take Starlink, services, those communication services, they're growing double digits, triple digits often. You see services related to space imaging, launch propulsion. I mean, our estimates are that if you just take what's already planned in terms of orbital slots and the launches it requires, launches are going to be growing 40, 50% a year for the next decade. And that, I think, is the exciting part of growth. So the 9% number might not seem so much, but the reality is there are pockets of growth. And that's what this ETF is about. It's why it's the Innovators ETF.
So the fund, like I said, had launched in March 30th, would happen to coincide with the Artemis 2 mission window. You called it a fortuitous coincidence. But the fund since debut is up quite significantly. I'm not going to say the numbers because compliance hates that. But how much of, the performance in the ETF is the Artemis tailwind, and how much of it is just structural demand for space exposure?
So Artemis was fortuitous, right? We've been working on this product for a while. I think we launched as soon as it became effective. We filed it earlier this year, and it just happens to coincide. As if you follow space launches, right, the weather matters, all these things. So like, there's no way you can really time it exactly 3 months out when it's going to happen. But it's really recaptured the imagination of people. I think it's gotten everyone to realize actually we can do this, right? It's the furthest astronauts have gone. It was, and I don't know if you've read the article in the Atlantic, like there was real personalities behind this. There were stories. It was a real human story. And I think part of space is it's this human element, right? We're going out there exploring this final frontier. I think in terms of the performance of the fund, that I think captured the imagination. But the reality is it coincided with a few things, right? You had the Artemis 2 launch, but you had also the excitement around SpaceX coming to the market. And SpaceX is going to open people's eyes to the space economy. And suddenly they can't just ignore it. It's not a sort of niche topic, nice to know. If SpaceX is going to be part of major benchmarks, investors are going to need to know about the company. When they start to look at the company itself, they are going to start to realize how much it's transformed the space economy and what are some of the other businesses that are doing the same. And I think that is what you're seeing there in the marketplace right now. Oh my gosh, we better look at this space and try to understand it.
So AUM growth has been very significant in the first handful of weeks here. It's a very, very strong launch by any metrics. No pun intended there, since we're talking about space. But what do you think is driving flows here? Is it that unique SpaceX demand that you have in the fund? Is it advisor allocation? Is it retail? Like, where do you think you're seeing a lot of your flows?
So obviously, in ETFs, it's always difficult to know exactly where it's all coming from. We just have the kind of final number, especially it's very early days, right? I think we're well on track to reach about 300 million, probably this week, maybe a bit later. The interest we're seeing is there's definitely a retail interest. I think investors have followed some of these companies in the retail space. They like it and they like the exposure to SpaceX. There's a clear demand for it in a vehicle like this. So it's transparent, it's easy to use, and they're getting that exposure. We've seen a little bit of advisor demand as well. Advisors want a kind of exposure to interesting growth parts of the market. As I mentioned, kind of some of those launch growth numbers, when you're talking about 40% growth, that's exciting, even in the context of just the sort of S&P growth rates right out there. Just given the uncertainty, people are gravitating towards like where is there some certainty and where there is a sort of a long runway for growth as well. And often that means they look at this space as well. So I think there's like a combination of these interests that have pushed investors, but really what we've seen in demand is it's a big retail following, which is great to see. And there's some advisor interest finding this for their client portfolios to give that kind of growth advantage. But I would say it's mostly leans towards retail.
And so, just curious, like playing a counterpoint here, like how dependent is this overall space thesis to things like government spending, Department of Defense, the Artemis program, budgets get cut. Like, how resilient is just the commercial side of this, where, the government spending in this area, does that weigh on, the overall maybe long-term success of this space? Is it an overhang, I guess, is the short way to ask?
Yeah, I would say that if you're starting to invest in kind of the future of space and you're forward looking and you're not investing in some of the kind of legacy, maybe defense primes, there's just less exposure to government. Government is part of that slower moving piece. But interestingly, within government, what we like are two things. One, programs and areas where government is embracing that commercial level of execution. And that's really interesting. Whether it's lunar, whether it's launches, Artemis 2, etc. Where we think there's kind of this idea of embracing some of that try, fail, keep moving on commercial level of manufacturing, there you see much faster growth within government and much more stability because they're seeing the results, right? The second element is the international piece I talked about. Germany is committing 30 billion euros to spend on space over the next 5 years. Japan is committing like 4 or 5. Italy, France are all looking to build their own national champions, and investing behind that gives actually, you know, increases the growth rate of government because there's a big program and a big push, but equally it's supporting a local company. So if you take a company like OHB in Germany, that is going to probably see a cut of that big pie that's going in. And that's what we like to see, a big commitment and a national champion. And we would back that from a government perspective. But some of that legacy sort of civil thing, yeah, I agree with you. It's prone to cuts and is probably a riskier part of the portfolio.
So I want to ask an overall question about, the theme or thematic space. You've said passive management really doesn't work well for themes because indices are backward looking and the winners of tomorrow aren't really the winners of today. So, space seems like the perfect case study for that argument. Can you give us, a specific example of where, you've seen active management really make a difference? I don't know if there's like a direct space index, but I agree with your point that active management in this space is important and to be able to look forward. So anything in particular about this specific product where you think that active touch gives you guys a little bit of an edge?
I think it's probably a bit too early to tell, right? The ETF's just been out in the market, not that long. So I can't sort of say, hey, here's a perfect example of where we've sort of thought something and it's happened. I think there's been early on, probably the exposure to the supply chain has been the right thing. I mean, you take a company like Filtronic, these companies are going to be doing really well. And part of what we like about them is they're high quality businesses. They're existing, they have good balance sheets, they're growing into suppliers, and they're just taking on less risk than maybe backing a launch provider, if that makes sense, even though those are also interesting businesses to look at. So we're seeing that kind of the fact that we found these under the radar companies, whether they're in Korea, Taiwan, the UK, is benefiting the fund and is creating this base of nice quality businesses. And they're often in the small to mid cap area as well, which makes them really interesting as companies, but also means investors haven't found them yet. And we're out there finding them. So that's probably where active management is adding the most value right now.
So I don't know how many advisors you've talked to. I've talked to a lot of them. They like to put things in buckets, right? This is my large cap bucket. This is my mid cap bucket. Here's my fixed income bucket. This is a unique exposure. Like, how would you approach like finding a bucket for this ETF? Is it, um, you know, is it tech? Is it? I mean, there's a lot of moving pieces here. Where would you kind of give an advisor a recommendation on where this product already fits in a well diversified portfolio?
I think I would say sort of two things there. Where I've seen really successful advisors, they've got their kind of traditional buckets, value, growth, parts of the equity market, internationally, US, and that is the way portfolios should be run, like a classic portfolio. But where we've seen successes where they introduce maybe a little bit of a satellite portfolio that sits on top of that, that takes parts of maybe the core or the mid cap allocation and just allocates it to areas of the market that are seeing thematic growth. So there's a kind of group of advisors that we talk to, and maybe it's across all of our ETFs, but really space as well, where they're saying, okay, I need something where the growth rates are higher and it's interesting. And I really like the approach you're doing by looking at the quality businesses within the space. So you're not just speculating on these companies. And then it sort of adds that extra uncorrelated growth return in the portfolio that they're maybe not getting by having the S&P 500. The sort of switch there is much easier now because of how concentrated the S&P 500 has become and how focused on tech and growth it's become. So you're sort of saying, hey, take a little bit out of these stocks that have done really well, the Max 7, whatever, reduce your concentration and buy something in an area of the market that's under loved and underappreciated, but has much better growth dynamics, much better quality. So for every unit of risk, you're getting that exposure. So that's one kind of group of advisors. Another group of advisors, they look at sectors a lot. And where we're sort of talking to them is saying, look, sectors have probably kind of passed their, use by date. And the world is becoming much more thematically oriented, and themes go across sectors, and they're much more powerful drivers of the stock market than the sectoral composition of those. I mean, if you take even tech today, right? Like semiconductors and software, right? Couldn't be more different, but yet they get bunched into the tech sector together. And so what we are starting to see is people saying, okay, well, I'm going to need to think about it thematically. And when you think about it thematically, you start to look for those interesting areas, and space is one of those.
Interesting. Well, if we had more time, I'd love to continue to dig into the themes versus sectors, because it's definitely an interesting way to start looking at portfolio construction rather than just the 11 sectors of the S&P. But unfortunately, Yuri, I really appreciate the time you spent with me today. Very interesting product, very interesting area of the market that I think advisors and investors are going to be looking in. But before I let you go, where can people learn more about Tema and the NASA ETF?
Absolutely. So anyone listening that's interested, head to our website, www.temaetfs.com. I'd encourage you to sign up to our newsletter, but there under the insights page, we're going to be writing tons of articles about space and about some of our other thematics as well. And if you want to check out information about NASA, you can go to the NASA page. So it's just www.temaetfs.com//NASA, NASA. And there's lots of information, all of the kind of disclosures that you need, our top 10 holdings, or you can follow as well. And we've actually recently added a handy FAQ for all of those questions related to the SPV, the valuation of SpaceX, the fees, all of that stuff is on there as well. So investors can get a clear picture of what we're doing.
Well, again, Yuri, thanks so much for spending some time with me today.
Sure, my pleasure.